A significant share of the cryptocurrency trading markets are driven by wash trading. Well, joining us to discuss this and more is Alexander Geralis from cXchange. Alexander, thank you so much for joining us on the line today.
It's good to be back, Jessica.
Great to have you back. Now, what we're talking about now is the fact that projects are losing money by paying to be listed on exchanges with fake traded volume. First of all, let's start with some of the price implications of this for these specific tokens.
So an exchange obviously pays a lot of money to get listed on most exchanges. That is anywhere between $20,000 and as high as $140,000 currently. And the way exchanges get tokens to list is usually they go to them and they say, we've got a substantial volume, and if your token lists on our exchange, there's a very good chance that that will support the price upwards. You can see how if they do pour in, especially now in the bear market, more money than they can afford, it's very easy for the project to go down.
Absolutely. And if we look at some of the exchanges that have, so only Binance and Bitfinex have 100% of real traded volume among the top instruments. What does this tell us about the exchange space? There is a lot of exchanges out there. We've only got 2 that are 100% real volume.
So this report is interesting because as early as January, February, people started complaining that Binance volume might not be real. And Bitfinex volume, people have been complaining about for a long time. There was actually one anonymous guy on Twitter who was very vocal about it, but none of that has been proven. Now, that being said, let's take it a step back and think about what an exchange does. And an exchange does help with liquidity. Now, that can be with human market makers, that can be with an in-house dealing desk, it might be with algorithms, especially at small price increments, or it might even be market makers that are just coming onto the exchange outside of the exchange itself as a private company to market make themselves and make profit. Now, that doesn't mean that it's not real volume. It is real volume because there are actually trades taking place. However, a market maker for the exchange might have lowered fees or 0% fees. Now, it's easy to point at this from a retail point of view and see that there might be some manipulation, but in fact, they're just adding liquidity. And what traders should be looking at is price first and volume second or third with other indicators.
And a lot of people are saying that actually it's kind of, there are plenty of pairs that only have 1% of real traded volume. So if we look at HitBTC and Huobi as use cases, they only had a quarter of their volume classified as being real. Is that good or bad when we do compare that some coins only have 1% of real volume?
Of course, it's not good. You want to be trading real volume if you can with other traders instead of trading against the market maker, because then you know that the trade is taking place the way you expect it to. If you're trading against an algo, and this usually happens when you're trading high frequency, which currently nobody's really doing in crypto, then yeah, it's not ideal. You prefer to trade with real traders, trading real money, real volume. But in the case of HitBTC, they have a lot of very, very small cap coins, and there just isn't a lot of people trading these coins. So they have to by somehow keep the chart working, and charts need a transaction to take place. They need 4 ticks a minute, so an open, a high, a low, and a close in order to paint a bar. So at least 4 ticks have to be fake or real volume. From there on, if there's somebody actually trading the token or not, you know, that's depends on the market cap and the activity of the coin itself.
And if we focus on activity a little bit more, so we have exchanges like Coinbase and Binance that have around 300,000 active users. Is that a better indication of trading activity to look at actually the active users here?
It is one indication, and I think that's something that the Institute did try using the methodology. They looked at how many people are logging in, if they're logging in from mobiles, if they're logging in from computers, and how long they're spending there, whatnot. But you know, coming out and saying that we have 300,000 or 500,000 active users, active by what metrics? Is that somebody that buys, you know, does a trade a day? Is that somebody that trades once a month? So it is good to hear that they have such a client base, but I would like to know more is what they define as an active user.
So what do you think would be defined as an active user then? How would you define it as someone that is involved in the market from that perspective?
I think a trader is definitely somebody that is making at least 3 or 4 trades a week. An investor, so an active investor can be somebody that buys, once a week or once a month, but definitely at least every month they are having some kind of activity, whether that's buying a small portion or selling a small portion. If somebody hasn't been on your exchange for a month, which is, it's a long time in trading hours, then are they really active? I'd rather say subscribed users than an active user.
And if we do go back to the figures that we had from Coinbase and Binance, which are 300,000 each for active users, that's actually not a significant amount when we really look into it. So what does that tell us about the level of adoption and popularity of digital asset trading? Is that lower than you were expecting?
In terms of Binance, it is a bit lower than I was expecting because, Binance has a lot of activity and they've been doing very well. They're very aggressive with their marketing. But yeah, that being said, I would expect a higher number. But even if it's 300,000 and they have 300,000 of which 5 or 10% are very large traders, these traders are going to be adding substantial amounts of volume. Whereas an exchange might have 500,000 users, but they're all very small retail accounts that are trading, no more than $100, $200. So it's not so much about the number of users, but it's the number of actual volume.
And if we focus on the trading bot aspect of this a little bit more, so can we use them we're seeing that they are being used to fake traded volume. Could they also be run by external parties to create profit?
Fake traded volume, no, not really, because they need the trade to actually take place to get their profit. But on the side of the exchange, if we're talking about the exchange making profit, they cannot, because they need an actual trade to take place, and they're fee-based. They make a fee-based percentage. So if a trade is not real, or if they're trading against themselves, what some people might classify as wash trading, they're not actually making a percentage. So that, in and of itself, I don't see any wrongdoing there. There is, however, a problem if they're going to clients who might want to list an ICO and say, look, this is our actual volume. That is a way that they can make profit. But if you're doing as good as Binance or Coinbase, which they're not doing random listings, I don't think it's worth risking it to try sell fees by faking your volume.
And moving on from this now, so if we look at the Blockchain Transparency Institute, they have created this list, this advisory list, and they have provided a lot of research. It seems like this is a majority of the market that we have seen. How much of bad news is it if you are an exchange and you are listed on the advisory list? Do you think it will make an impact in the long run?
I think, the way the crypto media likes to spread news, people will definitely start talking about it. But in the long run, nothing has really changed. The way it was last year, the way it is this year, things continue. So it's the same. However, that being said, it would be nice if some of these exchanges came out and they were more transparent. And that doesn't mean that the report is 100% correct. It doesn't mean that it's incorrect. But I do commend them because maybe exchanges will be more transparent. And we remember recently that it was discovered BitMEX has a dealing desk inside. That would not have been an issue if they said it earlier on, because they are providing liquidity, and that's part of what makes BitMEX an excellent place to trade futures at high leverage. However, because they didn't say it early on, there were some people that, they were not happy finding out later.
And that does make sense, actually, and we can understand the implementations of that. And I also want to get your opinion on OTC deals. So there are reports and there are speculation that brokers handle a large amount of deals over the counter. That obviously wouldn't factor into traded volume, but it is something that should be accounted for in some way. How would those two be intertwined, or is it completely separate?
Yeah, Jessica, you're right that there is a lot of large transactions that take place over the counter. There's the TABB group. They had a report that According to their estimations, it might be as much as 2 or 3 times the actual exchange volume.
Wow.
I estimate it to be closer to 1 to 1.5 billion daily. And this is based on what I heard from OTC desks. And if you count the desks like, DRW, you count Genesis, you put together all these desks and the average volume that they're doing, it must be close to about $1 billion a day. However, even in the OTC market, there's a lot of fake inquiries. The classic one is that you hear of some bank or some established high net worth individuals that they want to buy 3,000 to 5,000 Bitcoins. And then you try set up the trade and they don't want to reveal their identity, which is necessary because you're dealing with a large amount of money. And they're not prepared to produce source of funds or source of coin if they're selling crypto. So it would be nice to have more clarity there as well. I think a few weeks ago, itBit, who runs a substantial OTC desk, said that they will start publishing this information. Mm-hmm. And the way OTC is going, I expect a lot more transparency in 2019, and these numbers will become a lot clearer.
And you said transparency there, and you said clarity, which is absolutely right, that we do need to see a little bit more of. A lot of things that has been spoken of in 2018 has been decentralized exchanges, and people saying that actually decentralized exchanges might actually be the answer to some of these problems. What do you think about this?
I think the idea is great. If somebody manages to make a decentralized exchange which can address the issues that we currently have. And one of the issues is directly linked with what we're talking about now, with market making and liquidity and fake or real volume done by bots. There's just isn't the liquidity there. It's currently not a very attractive place to trade. And as far as I know, traders will only venture there if they're looking for coins that they cannot get on a decent centralized exchange. Mm-hmm. So liquidity is an issue. The other one is security. We don't know how safe these exchanges are. And if something does go wrong, you don't know who to go to. So when a centralized exchange is working, if something does go wrong, if it gets hacked, like CoinHack or whatnot, they are in a position that they want to protect their business and they might try refund clients. Whereas if a decentralized exchange gets hacked, the money's gone. There's not much you can do. So liquidity, security, and then again, interface and platform. They have to come up with better trading engines. However, we are all keeping eyes on what Binance says they will do. And you know what, maybe they can solve this issue and it can become a great place to trade.
Fantastic. Well, Alexander, thank you so much for joining us on the line today. It's always a pleasure to hear your insights. Thank you very much for your time.
Thank you, Jessica.
Thank you. That's all for myself and Alexander. We'd love to hear how you found this interview. What's your thoughts on wash trading in the cryptocurrency space? Share your thoughts with us on BloxLive TV Twitter.
This is BloxLive TV.